nothing too heavy this week. I think Anthony is bored of me talking about rates and inflation and what's not already.
No, I mean rates are interesting, right? But I just hope that Powell doesn't change the outlook every other week. That's just a bit too much change, right? We want stable, consistent, predictable macro policy, which it hasn't been, and I think that's partially what's causing all of these problems as well.
Yep. Yeah, so I think a couple of things to note for this week is that the signs of weakness in the US still goes beyond Omicron, right? We also see like fourth quarter earnings beat rates are back to like 5%, which is around the long-term average. And also this is well observed over like 18 months, where previously the beat rates was about 15 to 20%. So well done, I guess, in some sense. I think the key question is whether...
Wait, sorry. Yeah. Beat rates are like earnings beats compared to consensus, or
that's right.
Something else?
Yeah.
Okay.
Yeah, it's actual term. Yeah, so... so I guess the key question that we all have is how long more is it going to take before we all return to normal? And will we ever experience a period of under earnings, i.e. having to pay back in that sense? And a lot of the economists on the streets.
That one recession really.
Yeah. Hey, well,
I mean that's the fear, right? We raise rates so much, we fight inflation, and we go into recession. Then jalat equals more jalat.
Hey, I hate to break the news, but like Wall Street economists are actually holding on to the view that the payback was coming in first half of 2022, as the extraordinary fiscal stimulus faded and monetary policy tightened. Yep. So I guess in some sense is that how I see this is that I think there's still gonna be 6 more weeks of winter. So stay defensive, everyone. 6 more weeks, particularly because there's the next FOMC meeting as well. Yeah.
Okay.
Exciting times, sir.
So do you think in 6 weeks they're going to do a rate hike? Sorry.
Yeah, I think that the rate hike is to come, and everyone on the street.
Oh yeah, I think it's pretty much.
Yeah, exactly.
Right? I mean, I'll be relieved if they give like quarter point rate hike. Okay, good. They know what they're doing. That's good enough.
0.25. Yeah, exactly. I'm waiting for a rate hike.
50, yeah. If it's like 50 basis points, then okay, a bit scary, I guess.
Yeah, the question now is whether it's going to be a 50 basis point or 25 basis point, right? So there haven't been a case where they led a rate hike with a rate hike cycle with 50 basis points. So if they ever do that, it's going to be exciting times. Yeah, maybe a little bit more redness in the market. Yeah, we never know.
But I honestly, sorry, guys. I honestly don't believe so, right? Because he mentioned that, and last week we spoke about this in our podcast, was that he was waiting to see the data, trying to get more information before deciding more. So I think it's going to be 25 basis because he doesn't want to shock the entire market as well, right?
Well,
I don't know though. I mean, at the end of the day, if the goal is to fight inflation and you fight it by, sending a statement, right? This is the way you send a statement, right? And so if inflation figures don't seem to be coming down, then I don't think we can discount that possibility. Yeah, let's put it that way.
Well, I guess both of you are right in some sense, right? Because like if you look in the money markets participants, the traders basically are saying that 50 basis point, 25 basis point, we don't really care. We just want to see a rate hike. In fact, they are already pricing in 50 basis point, slightly more than 50 basis point for the March FOMC. So no biggie on that, whether it's 25 or 50, to be honest. Yeah, it just has to happen.
Yeah, so actually if it's 25, you might see a green day.
Yeah, 25. Oh, so little.
Hooray.
Happy days, lah.
Let's pump.
Yeah. Today do one, tomorrow do again.
It's insane. No, every month. There's still really 7 rate hikes, right? One every meeting. It's like, also chat.
Yeah, but
7 rate hikes. They only have 6 meetings, what?
They can make more. Yeah, who's to stop them?
Oh, yeah, that's fair. That's true. Yes.
Yeah. I think maybe let's deviate a little bit away from the Fed. Shake things up a little bit. I think in the US economy, there's a couple of things that we can look at as well. So if you look at, say, what I coin as the great inventory rebuild, has begun. So you start seeing like, more the auto industry starting to recover a little bit more. You also start seeing some form of, supply, we have discussed about it, the supply chain issue and what's not. So, it's becoming more robust in some sense. Everyone has learned from the lessons and essentially tried to build on the inventories and what's not. So if you look on data from that point of view, you see like durable goods, durable manufacturing, non-durable even, they're all picking up, even in the mining industry. So in some sense, we have moved past the worst in the whole supply chain disruptions, and inventories are essentially rebuilding, right? So that's a great start, Great start to the new year.
Yeah, I mean, if to the extent that inflation is possibly supply side cost, then the easing of the supply chain kind of helps towards that as well, right? Which the Fed can really deal with. So at least that's a potential problem that's getting resolved.
Yeah. For sure. I think that whatever supply side issues that have already been mentioned, it's gonna still continue to weigh down on the manufacturing sector a little bit here and there. But it's definitely gonna be one of the key drivers for GDP in the coming years as well. If you look at, say, like the CapEx plans index in the US, then that's something that you realize that while they are losing steam in January for the second consecutive month, they are still, well elevated in that sense. So still poised for a very good year ahead. Yeah, potentially, fingers crossed, that will do well for equities. Yeah, in the near run as well.
Yeah, man. I think it needs to do well for us, lah. So let's hope. Let's get the rate hike.
I don't know, man. I mean, I think to me there's three broad possibilities, right? One is we tighten so much, we go straight into recession because economic growth isn't as good as we think it is. Right? It's fragile, and that is Jalat squared, right? It's Jalat. If it's tightening and everything crashes and economic growth slows down but no recession, and the Fed goes, hey, you know what? Maybe we tighten a bit too fast. We need to slow down. Right? That to me feels like a good outcome for stock markets. Not good for real economy, maybe, but good outcome for stock markets, right? Because we are back to money printing, right? And the last is we have really strong economic growth, and and Powell I'm super good. I can keep raising rates, and he raises 6 times, 7 times this year, right? That is not going to be very good for our portfolios. Still good for our economy and good for Americans, but I'm not living there, so I don't really care about inflation in America. But at the end of the day, I think that's the three scenarios in my mind, in that sense. So, I mean, good economic growth. Okay, that takes the quick stock market recovery maybe a bit off the table. But yeah, I mean, good for people lah. So I guess we should be happy, notwithstanding my net worth being sad.
What happened to you?
I think with
you sound so pessimistic. Yeah, Anthony. What happened to you after the New Year?
I'm just tired.
The three scenarios, right? I think doesn't turn out good for him, right? Except I think scenario 2, except for QE, but he will get affected in the short term. No, but I think
So. I can't seem to think of a good way out of this in the short term, but of course, if somebody wants to make me happier, please tell me.
I think, your scenario 3 though, right? If everything is good and no recession, like you mentioned, I don't think Powell could say he's looking inward and he's looking only at the domestic economy and stuff like this, but that's not the case when he increases rates, right? He's got far-reaching effects indirectly to many, many countries out there, right? Africa, which is a big one. We have Singapore, right? We all know what the US impact every time they raise rates in Singapore is, and I think that's also another angle that they have to look at as well. Whether they go ahead and they put that as part of their decision making, that's where is a big question. And I think Jeff has also mentioned that Powell only looks inward. But I think that's the generic line that he has to say. I don't necessarily think that's always the case.
Yeah.
Okay. Let's not get into conspiracy theories to make ourselves feel better. Yeah.
I don't think conspiracy theory, but okay, fine. Yes. Either way, thanks for the quick outlook here. Stay defensive. Let's hope for a good rate hike in March of 25 basis points, so it can be a green day, and we can make some money out of it, folks.
Yeah.
But I mean, I think only Jeff will make money. I'm not a short-term guy, right? So green, good, and then next day rate again, bad. That doesn't make sense.
Unfortunately,
long-term,
unfortunately,
right?
I don't
Value,
run a
value.
equity trading portfolio on my own personal account. I wish I do.
Okay.
Man. Yeah, I'm not
You need to get your conflicts checked out.
I'm not a short-term game either, but I'm hoping that in 3-4 years time, obviously this will be good for us, right? Stick to what we know and go for it.
Yeah.